Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Yesterday we had the CPI. Today we had the PPI. So if you're wondering what the heck is that wick at 8:30 that moved to the downside and then a rapid move, that's a 100-point plus swing, about 130-point swing that we saw on that PPI data. The data itself is not really what we're after. What we're after is what's after about 3 minutes to say 5 minutes. What is ultimately the direction that the NASDAQ, the Dow, S&P, Treasuries, what direction do they get after the data has been essentially digested? Now, if you take a look at bonds, you'll notice that the initial reaction was to the downside. We snapped back up. So it's really been in pretty much a range there. Bonds had a good session in terms of yields going lower. Expectations, by the way, let's jump on over to this right here, the CME FedWatch tool. This is your macro decoder ring. Holy cow. No, that can't be right. 90. Wow. So as certain as we are that the Federal Reserve is going to hold at the July 31 meeting, in just over 2 weeks, just under 3 weeks, we are now expecting 93.5% a cut from the Federal Reserve in September. Wow. Now look, does this have to automatically map to higher highs in the NASDAQ? Remember, gang, it's interesting because whether I'm doing this show with you all or whether I'm just sharing something on Twitter or whatever, it's always interesting to see what the perception is. So, when traders look at a trend day to day to day, and if something just has a down close, a lot of times traders that are usually momentum oriented will say, the trend is no longer there. That's different than saying the market's unwilling to go to higher highs and higher lows. That's really a momentum conversation. The market can pull back, whatever the market is, whatever the symbol is, can pull back for sometimes days and still have a trend intact. So let's talk about the NASDAQ yesterday. All right. But before we get to that, let's talk about the span of time after we punched up to some higher highs in May. And then we spent from May 28th to May 31st pulling back for 3 sessions, and then the uptrend resumed. Then we punched up to a higher high on the 20th, and we pulled back until the 24th of June, and then higher highs. So what's interesting about yesterday is that rather than taking 3 sessions to pull back, we basically pulled back. If you take a look at the symmetry of those 2 previous pullbacks, they're about on par with what we're seeing in terms of yesterday's high to today, Friday's low, with those previous. So in terms of symmetry, it's pretty much in line. In terms of the time it took to create that pullback, obviously it was far swifter. But there's nothing about this uptrend, even after one down day, that undoes 2 things. One, the uptrend on the NASDAQ, and in the backdrop of that, we are continuing to have higher and higher expectations for Fed rate cuts. Now remember, gang, it's not the cuts themselves, right? When the Federal Reserve is preparing for a dovish cycle, a cutting cycle, accommodation, it's that preparation that we rally. So that's why I say rate cuts, or I really should say more specifically, the expectation of rate cuts is not bearish, right? Is never bearish. Now, once we start cutting, that's a different conversation. But we've spent at this point, by the time we get the first rate cut, we will have expected one for a year, right? So the expectation of rate cuts. And so now that we finally get the cuts in September, look, we'll see how much further the Federal Reserve expects rates to go, how much further lower they expect rates to go. We could look out to April and you can see expectations are for, take a peek, a 1.25 lower than they are right now. So it's not as if come September, all of a sudden the markets are going to tank because we got what we wanted. No, now then it becomes, okay, the Fed gave us the first cut. How many more will we get? Yes, it's like Halloween candy. They gave me 1, might they give me 2? Right? So it's the same thing. It's not that the rate cuts themselves have to happen to rally, as you can see here, the equity markets. So that's what we're going to continue to do, right? And this is not a question. This is just fact. All right. So the anticipation of cheaper money is always generally bullish. Will it be bullish every day? No, of course not. That's tooth fairy thinking, right? We're not going to wake up to a dollar bill under our pocket every day. But overall, the market continues to move higher. And that's what we're going to continue to take advantage of. Are we probable to punch through 21,000? I think it's a whole lot more probable to go through 21,000 than it is 19,000, right? And the same would go for the S&P. I know a lot of folks have these massive downside targets. How about we just break the trend first before we start, prognosticating about going to 5,100 or whatever the number is, right? Is it more likely we'll go to 5,700 than 5,650 or that? I don't know. Those are really near term, right? But are we likely to keep with the uptrend? That's what we've been doing, gang. I mean, look, doing anything but focusing on primarily buy the dip is number one, low probability. Think of all the times that traders might have luckily picked the high and gotten short. Very low probability. But buying the dip has largely worked, and we'll continue to focus on the long side. It doesn't mean we're going to punch up to a higher high every day, but it certainly doesn't mean that one day, like yesterday, undoes the uptrend. And that one day, when put in the perspective of the previous two pullbacks, which granted took 3 days, this took about one, right? So it's the speed at which that happened that can be jarring, right? It's the speed. All right. So as always, if you have any questions, let me know. I'll be happy to take a look at the charts. We got a question on 6A and a question on gold, which is kind of cool because they are sort of related to each other. Australia and the Australian dollar, you can see here, Australia is the third largest digger of gold on the planet. And Australian dollar is what's called a commodity currency, which is to say there is a commodity or commodities that tend to be kind of the bedrock of the Australian economy, especially when it comes to exports. And it's things like iron ore, aluminium, as my mom says, and gold. And so if I take a look at the 6A, there's two things we can glean from this. One, we don't know. Again, I haven't looked really closely at what the Reserve Bank of Australia is planning, but most of the major central banks are preparing to cut rates. Okay. The other part of it is the U.S. is really close to cutting rates. So the U.S. dollar is going to be kind of weak. So weakness in the dollar, strength in the Aussie. Aussie usually likes economic optimism, economic expansion. And lower rates are oftentimes the precursor to that, right? Things just, money being cheaper to borrow is oftentimes a precursor to that. So in a lot of ways, what we would look at here is I don't want the US dollar weakness to be the driver of this currency pair. This is a pair, by the way. This is Australian dollar versus US dollar. Even though we call it the Australian dollar, there's two currencies at work here. So as long as there's optimism around economic expansion, as long as there's demand for gold, we should see the Aussie continue to move higher. And so, Pat, that's what I would look at there. I would continue to focus on the long side. It's not quite an uptrend for me, but it is bullish, right? Which is two very different things. We can be in a bullish environment where momentum is up, but the trend hasn't yet organized for me to call it an uptrend on the daily anyways, but it's definitely bullish. Now, the next thing we can look at is gold. All right, this question would be related to the Aussie in that, again, a big export for Australia is gold. And gold is not yet in a trend. We day traded gold yesterday. That was a monster day trade for us with GLD. But gold is not in a trend yet. And gold is still very erratic, right? We call these shark teeth. Gold is still incredibly erratic. Is it bearish? No. Green candles in terms of these top tier candles, yellow is neutral, red is bearish, green is bullish. So you can see we're basically teetering towards neutral to bullish. So I would consider this bullish chop. And if we get another opportunity to buy in the gray zone of the volatilities, this gray support zone, if we get another opportunity to buy down there, I most certainly would be open to that. And ideally, we want this all moving with bonds because gold also reacts to real yields. And real yields, part of the calculation is the shorter end of the yield curve, the 1, the 3-year notes. And as long as the yield on those is coming down, and as long as inflation is coming down or flat, the real yield narrows, that sends gold to the upside. And so I would definitely focus on gold to the long side. I would definitely focus on bonds to the long side. And look, whether it's the daily time frame you're looking at gold or bonds on, whether it's the 1 hour time frame, remember each time frame really should stand alone. I don't want to get caught up in this expectation that if the 5 agrees to 15, the 15 agrees to 30, and the 30 agrees to the hour, I'm not looking for that cascading. Oftentimes what that's going to do is I'm going to miss a trade. So I look at one time frame for what it's telling me. It's an individual slice of psychology. I mean, think of it this way. If right now at 9/11, you're kind of tired, does that mean at 10/11 you're still going to be tired? No, the caffeine's probably kicked in, the bell's rung, and we get to work. So that's kind of like looking at a 5-minute chart and saying, oh, that's how you're going to feel for the next hour. No, the hourly chart will be a little bit more indicative of that. And if I want to know what I'm thinking for the next session or two, it might be the daily. So I use each time frame as a standalone. And if you want to do that, then yeah, try to find some trends, some bullish candles on the 1 hour, and you could be a little bit more nimble about a short-term swing. All right. Next up, how do we play XBI? Well, first of all, Dave, I want to make sure that if I'm looking at something like XBI and I'm going out to say even something like the July 19, next Friday's expiration a week away, there's plenty of liquidity on XBI. By the way, this is the biotech, right? So if I want to understand what's going on in biotech, I need to crack open the sector and look at what's heavily weighted in XBI, make sure that the heavily weighted stocks are in agreement with the tide, that larger, in this case, XBI sector ETF. And then for the most part, I'd be focused on the long side on XBI. But let me mention this, and I'll be really frank. I don't trade biotech. It's way too much. One stock got approval and it shoots up. It's very, very difficult for me to find a lot of really nice seamless type movement. You can even tell here, it's a very gappy stock because it tends to move with a lot of sudden news about stage this or approval of that or whatnot. So, or disapproval. So I'm very cautious with things like XBI, but that said, it is bullish and it has been at least bullish chop since mid-May. So if that's a sector you're comfortable with, yeah, no problem, Dave. Keep an eye on it, but crack it open, make sure you know what's weighted within it and that those heavily weighted stocks are moving with the XBI. All right, FANG, Diamondback. All right, Diamondback, much like a lot of the oil names right now, they're trying to coattail CL. And some of the oil names are also really nutty gas names as well. But CL is in an uptrend. So I would slowly expect more names in XOP and in XLE to move higher. They're not all there yet. I'll straight up. I took a shot at Schlumberger. I had to pull the trade because we got in. It didn't do what I wanted. So we took a quick loss. And I do mean a quick loss and got out. So remember, we can take a shot at different entries in energy. I don't have a problem with that. I think FANG would be closer and better to say 200, maybe in about 199.80. But if that level can't hold with crude oil climbing, keep the stops kind of tight. I don't want to be short this sector, but it is most definitely a sector that I am bullish in as long as crude continues to climb and really stay above $80, $81 a barrel. All right. As far as NASDAQ goes, I've got long positions in XLK. We triggered a long position on Walmart. We triggered a long position on QQQ. I'm still in these positions and I'm going to continue to manage these. If you're in the Sector Secrets Mastery, by the way, every single day I send out a trade recap. So what do we do that day? What price did we enter at? What price did we scale out at? What price did I get stopped at? So we have this running tally every single day where I send out basically here's where we are with the position. So if you take a look, and also midday, I reminded everybody that we were making a first to second standard deviation move on the sell-off yesterday because it was so large. It was really basically 3 days in the previous pullbacks, 3 days worth of sell-offs, all compacted into one. But that said, I wanted to give the NASDAQ, because it still is an uptrend, a little bit more wiggle, a little bit more room to move, because it did hit an extreme at the first standard deviation, which is nearly always a level from which the market doesn't gap down the next day. It actually starts to attract buyers. So I'm still looking to the long side on all of those. And by the way, Mastery members who are listening, remember, every single day I send out that trade recap. Yesterday's list was pretty beefy. Our gold trade, I had to close out. Let me give you an example of what goes out. So yesterday we recapped the CPI futures trading session, which was a really good morning. Even before the bell rang by 9 a.m., we had two really nice winners in S&P and NAS on the short of the CPI. We had a gold day trade that went from $1.93 to $1.95. So we bought gold options there, the 12 July 220s. We closed them out ultimately at 295 and 330. So I send out these trade recap summaries. I closed out Amazon at a break even yesterday after taking it from 605 to $10. We are still in Colgate. We're still in telephone. We had to close out Intel from taking that from $1.40 and $1.50 to $2.08. I closed that out at $1.45, so break even there. So, and then I gave everyone my swing price on Walmart, XLK, QQQ, and just every day. So, Rob, what are you in? What are you not in? We just send that out as an alert every single trading day. So, yeah, if you want to know where we are with those, yeah, for sure, check out the summary. All right, next up is what are my expectations for upcoming earnings season, and how will results affect my trading? Larry, I have no expectations ever for earnings in terms of anything that I'm doing. Nothing that I do and no trade that I put on is earnings the main driver. That's just, to me, that's a coin flip. That's a scratch off lottery ticket. However, we can expect, what are my expectations? Volatility. That's really it. I am flat in the window at least 2 days before earnings and 1 to 2 days after. So that if earnings are on Wednesday, I want to be flat by Monday, Tuesday, if I even have a position. And I don't even want to think about an entry until there's one entire completed session of trading after the earnings release. So if the earnings release is after the bell, I'm not even to think about trading that stock or the options of it until an entire session later, sometimes two. So that's the first effect. We know we're going to get volatility. It affects my timing. But there's no, look, gang, earnings are one of those things that have become this spectacle, and not for the better. I actually hate earnings season. It's a lot of noise. It creates a lot of volatility that doesn't necessarily need to be. And so I really don't like it. That being said, I have to respect it, what it's capable of doing. So the way that it affects my trading is the way that it affects my timing, Larry. So the timing has to be, in another way to put it, I can look for rallies into earnings, but I want to be flat by the time earnings come, and I won't even think about getting in until at least one completed session later. All right, next up is SMH. Yeah, there was look, I could have gone on a buying spree yesterday. I really could have. And I really wanted to, Darwin. There was a lot of things that were, whether that be Apple, Taiwan Semiconductors, XLK. I mean, there were so many things, Google, that I could have bought. There was at least 7 really valid pullbacks that I could have taken. I chose 3, and one of them had nothing to do with tech. We bought Walmart. And the reason for that is when we do have extreme moves, there is a certain amount of unpredictability. The market tends to move in a very predictable way 68% of the time in terms of price movement ranges. But a day like yesterday is so jarring because it exceeds the 68% that we would typically see in a session, and it goes into that rare air of the 32% that we see a lot less often. So it does behoove us to be a little bit more cautious. But yeah, I have about 7 different names on my notes that I thought, gosh, every one of these would have been fine, but it would have been a lot of exposure to tech on that pullback yesterday. Semiconductors were one of them. I definitely want to keep an eye on that. I'm not viewing this as sector rotation. No, not quite yet. And remember, again, as we wrap up, we don't have to have rotation. Money can also come off the sidelines, and we could see participation. What's the difference? It's the difference between we have to see NASDAQ or semi or technology profit taking for, say, Russell or Dow or energy to move higher. That's sometimes true, and it could last for a session or two. Sector rotation doesn't have to last very long. So I want to observe it, but there's no way to predict it. And it's certainly not going to be a way that I will set up trades. Follow the trends, and that'll tell you 90% of what you need to know. All right, gang, as always, thank you so much for all the questions. Thanks for being here for Charts and Coffee. If you want to learn more about what we're doing in the Sector Secrets Mastery, whether that's day trading, scalping, swing trading, we have a longer term position portfolio, and also the way we break down macro. Of course, we do that here every morning as well. A little quick look. But if you want to deep dive on all these things as well as get my trades, check out sectorsecrets.com, and I'll see you on Sunday for the top tier outlook. If I don't see you till then, have an awesome weekend. Thanks as always. Be good to each other, gang. And let's see what this PPI aftermath has to bring. Until then.